Hello guys, welcome to my YouTube channel. So today we are going to do a weekly breakdown on gold and BTCUSD so that we can come up with our weekly bias. Yeah, so that we can know what we are going to do this week. So first things first, you're going to start from the yearly time frame. You can see that the yearly candle is bearish. It is looking like a doji. It is an indecision candle. We don't know whether price is going to go up or whether price is going to continue going down on the yearly time frame because the candle is an indecision candle. So when you go to the 6 months time frame, you can see the same. When you go to the 3 months, we can see that we also have the indecision candle and the When you go to the monthly, we can see that we had the last structure that we had was a hidden liquidity. You can see that price has already come and mitigated at least 50% of that area. We can see that we are having some reactions on the 50% of that hidden liquidity. Also inside this hidden liquidity, we can see that we had a candle liquidity. That's liquidity. We had a candle liquidity. Why? Because you can see that this candle tried to break this swing point with a full body candle but did not have sufficient liquidity to do so. But the other candle confirmed that we are bullish by closing above with a full body candle, indicating that we are bullish, but we could not continue going up. Before grabbing this liquidity or fetching for sufficient liquidity so that we can be able to come and break this swing point high here. So when you go to the weekly time frame, you can see that it was an area which was a single area. We can see that the nature of breakout, price did break out with one clear move. We had that retracement. That retracement did not reach 50% of that structure, that single area structure. Okay, we can see that this structure that was here, we can see that price came back, mitigated 50% of it. We can see that price came back, mitigated 50% of it, bought, but lacked sufficient liquidity for us to continue the bullish moves to take that high. So we had price react to the premium levels. We had price react from the discounted levels of the sellers, and we've had price come back to this area of liquidity right here so that we can buy. So we can look for a structure on the daily, 4 hour and 1 hour. So when you come to the daily, we can see that when you come to the daily time frame, you can see that we had a structure. We had this structure right here. We had that structure right there. That structure came back, mitigated that impure level. You can see we had some impure level right here. You can see price came back, tried to break the first time, did not have sufficient liquidity, came back, then did a full body break. We can see price came back again, created another structure right there. So on the daily time frame, we can say that we had a double area structure. And something that is on my mind right now, we had something like this. We had price retrace back to mitigate this first area, okay, but we lacked sufficient liquidity, so price came back. Then this high acted as a deviator to push price down to go and grab sufficient liquidity so that we can be able to come and break that area there. So we've already had something like that. We've had price come back to 50% of this area, and now we're expecting price to go back and take out the external range liquidity. We had these two areas like this. So when I look at these two areas, we can see that price came back, mitigated 50%, went high, traded high, lacked sufficient liquidity to break that swing point. We had this area. We had this area here, the discounted level of the sellers. price reacted from that area, and we have already come to the area below. On the area below, we can see that price came back and mitigated 50%. That's on the daily time frame, and we can see a huge rejection to the upside. So if we see some bullish liquidations, we can take advantage of them this week, and maybe trade continue with the bullish liquidations. So here we can see the nearest structure that we are having is this one on the 1 hour time frame. The nearest structure that we are having is this one. So we can you can wait for a breakout so that we can confirm our bias that we are bullish, and then you enter with the bullish liquidations, or you can enter these bullish liquidations right here and make sure you have exited first on this area of supply, on that area of supply. So but for me, I'm not going to take any counter trend. I'm going to look for bullish liquidations this week. Yeah, and I'm going to react when price aligns with time. So if price doesn't align with time, I'm going to stay on the sidelines and react when my system aligns accordingly. So we can say that we already have a bullish bias on gold. We already have a bullish bias on gold, and our work is to react when price aligns with time. So we can go to the BTCUSD and see what we are anticipating. So we can start on the yearly time frame. You can start on the yearly time frame. You can see that the candle of the yearly has been bearish. The previous year's candle closed with a doji, indicating some rejections of higher prices. When you go to the 6 months time frame, you can see that the candle is bearish, and we already have this key level. This candle overlap is a key level which can make price to continue going up. So on the 3 months time frame, you can see that the 3 months candle is also bearish, and it's also rejecting from that key level. That key level, you can see also it's also a hot. I can say it's a double area because this candle's low never mitigated this area. So this area is a free zone. Okay. And we can also see that we had a full body closure right here. The nature of retracement was retracement with some volume candles, indicating that we are going to the area below if you are using the double area structure. Okay, so if you can see that and you can see that this is a double area, we can see that also price came back and reacted from the 50% of the area below, indicating that we can be bullish. We are bullish. So we can see that price came back to that area right there. To that area, we had that huge rejection. The monthly candle looks like an indecision candle. It neither swept the low or nor the high of the candle. So we can expect this month we can either target the high of last month or the low of last month, but we are bullish, so we are going to target the high of last month. So on the weekly time frame, you can see that price came back, rejected. We have seen that price has been consolidating inside here. We want to see if you are going to see a shift of market structure on the lower time frame, on the daily, 4 hour and 1 hour. So when you come to the daily time frame, you can see that we had this low here. Price came, tried to break that low, did not have sufficient liquidity to break, right? And you can see that price reacted from that key level. After price reacting from that key level, we can see that price came back and did what? price came back and broke structure. Price came back and broke structures to the upside, indicating that we are bullish. Price came back, broke structure to the upside, indicating that we are bullish. We can also see that price came back, reacted from this key level again, reacted from that key level again, and price was also bullish, and we had a full body break right here. Okay, we had a full body break right there. So I'm going to study price using that range low and that range high. We can say that this one is our strong this one is our strong high. This is our strong low because it initiated a break of structure to the upside. Okay, so these are some the bullish liquidations that we are talking about. So we can see that price did that full body closure above, indicating that this low is strong, and we can see that price has already come back to the discounted price of this candle right here. So when you go to the 4 hours time frame, I'm going to look for a structure on the 4 hours time frame. So on the 4 hours time frame, you can see some kind of entry model that I use. We have that area right there. Also, this one is a single area on its own. Let's go to the 1 hour time frame. On the 1 hour time frame, you can see that price came back and bounced from what? Bounced from this demand level. You can see that price on the 1 hour came back and bounced from that 1 hour level. So on BTC, we can also wait for what? You can see that the nearest structure that we are having is, you can see that price came back, broke that structure with a full body candle, retraced back, then came back and broke that structure with a full body candle. So the nearest swing point that we are having, so that's our BOS. The nearest swing point that you are having is this one. So if you see a shift, if we see a full body break right there, we are going to react and look for buys that is going to, and look for buy positions. So on BTC, I'm also having a bullish bias. I'm also having a bullish bias on BTCUSD. So our work is going to be reacting when price aligns with time. So without much ado, if the video was insightful, you can consider subscribing, consider sharing the video, and doing hots and liking it. Okay, so if you have a question, you can drop it on the comment section, or an area whereby you can you're interested to know about. You can write it on the comment section, and then I'm going to make an effort and do a video of it. So enjoy your day, enjoy your week, and remember to react always when price aligns with time. When liquidity based on time and liquidity based on structure, when they align, that is when you react. So thank you for watching the video, and I see you next time.